So thank you to Natalie Svegaard and also to Jodie Smith, Jessica Espinoza and Peter Fossel for those 4 fantastic keynote speeches. Coming up next, we're going to have a fireside chat, then another keynote speech which will bring us into our coffee break. And remember as well that at 5 o'clock we will have a presentation of the key takeaways from the breakout sessions. So especially if you weren't able to make it to them or you are listening at home, these will be really nice to check in and see what was discussed. So now I am delighted to welcome to the stage Josef Zahar, CEO of Pandan Green, and also Barbara Bose from Neindorf Climate Finance. The objective of this session is to discuss sustainable, climate impact-focused investment opportunities for institutional investors. So please join me in giving them a round of applause. Give you this one.
I think it's okay. No? All right. Good afternoon, everyone. Good afternoon to the session on the pathway to investing in emerging economies and impact climate finance. Maybe before I get into the subject, a word of warning. In preparation of the session, we have agreed that we would move away from the traditional fire chat setup and make this more of an interactive conversation on this very important matter. Because in a way we are in the privileged situation of having a GP representative and an LP representative sitting here and speaking about this subject. To introduce myself, my name is Barbara Bose. I'm an independent advisor, mostly to GPs in the impact and climate finance space. Before that, I was working for more than 20 years at the European Investment Bank, and there most recently in charge of climate and infrastructure fund investments. Hence, I'm looking back at a long experience on the LP side. And I have the pleasure to have with me Josef Zahar, CEO of Pandan Green, who is representing the GP side of the equation. Maybe to dive into the subject, Josef, if you could first of all introduce yourself a bit more and your fund that you're currently raising. I should also mention that this fund is a member of the 2020 cohort supported by ICFA. And then maybe also dive a bit into your experiences, your observations during your fundraising trajectory that you have achieved by now.
Thanks very much. Okay, yeah, that's better. Thanks very much, Barbara, and for the introduction. And good afternoon, everybody. It's a pleasure being here and talking about my experience and getting this view from the kind of LP perspective, which is critical in a way. Just briefly about myself, I'm with a finance background. I moved into impact finance some 15 years ago, and have been based in Asia Pacific for quite a long time. And as a result of the activity there, the idea of Pandan has emerged. What we really want to do very briefly is bring mobilize climate finance into developing Asia Pacific. And we would like to bring this finance to financial institutions and then work with them on a transition for vulnerable communities. Now, we want to do that at scale, and everybody, we are talking about the scale, we know that the scale is required. The few reports talk about adaptation gaps, or necessary climate investments of over 2.5 trillion annually till 2030 for meeting 1.5. And then, on the other hand, we have commitments currently from governments of 100 billion annually. 100 billion annually, which is this coming COP has to increase much dramatically towards the 1 trillion. And so we are coming from that perspective, and we say, okay, what we're doing is a drop in the ocean, but this can be start, because what I didn't mention is that we actually want also to tap capital markets. So we want to tap capital markets and bring those funds from institutional investors into those developing economies and being part of the solution for the transition of climate finance for those countries. So I think that our experiences, I mean, we have been at it for a while, and it's been a challenge. It's been, I have to admittingly say, it has been difficult. And had I known from the beginning that that's going to be the process, I would have decided to take it anyway. But that's the way it is. Because as much as it is a challenge, I mean, it's all a learning exercise. It's, you do things which eventually, even though if you're not yet raising the fund, you're doing things which contribute already to the solution. If it's discussions that you're having with financial institutions, stakeholders on the ground, investors, this all adds and builds the knowledge towards the solution which will be coming. So back to kind of LPs discussions, we held multiple discussions with institutional investors, DFIs, and it was all very frustrating, I have to say. We are approaching a breakthrough, and there have been some investors. We have actually an anchor investor, which is an insurance company, and they have been supporting us throughout. But generally speaking, it's an uphill struggle. And we think always we are saying we're actually ahead of the curve, and that's why that's the case. We still believe that that's the case because we see that now blended finance structures are becoming more and more kind of, okay, the thing to go, because everybody understands that we need to bring climate finance, and the way to do that is with blended finance. But what we've encountered is misunderstandings, regional issues. We're saying we are not investing in that geography or not another, lack of transparency, and just a very long ongoing discussions and eventually a no in many cases. So perhaps going back maybe to you, Barbara, and asking why is that? I mean, why we are facing such difficulties?
Well, thanks for this question. I mean, I think the starting point is if you do impact climate finance in emerging markets, you will always have to score high on the risk front. I mean, the business risk you're targeting is basically high business risk, and there's relatively little you can do about. You can follow blended finance models, indeed, to find an element of either de-risking or enhancing the risk-return equation. But this is basically the core of your business. What I believe is one of the reasons why LPs are yet somewhat hesitant to invest in such vehicles is that it is super important to also look at the other elements of your fundraising. I mean, an impact fund has impact, but it also is a fund. And it needs to follow all the features that a fund, be it impact or not, have to follow. I mean, there has to be best-in-class governance, there has to be an excellent team on the ground, there has to be a clear narrative on the ground of the investment team, how this basically provides a contribution to value creation. There has to be the appropriate investor protection rights and so on and so forth. And one of the reasons, and obviously not talking about your fund proposal here, that's very important to underline, but one of the reasons why I was very often in a situation that I could not take forward an investment proposal is not necessarily because it was kind of unacceptably high on the business risk side, but because there were gaps in the overall structuring of the investment proposals. Then another very important element is, and this is very much true for DFIs, but also for private investors, is, I mean, normally you invest out of a mandate, And this mandate has a very clear kind of boundary of what you can do under this mandate and what you cannot do under this mandate. And depending on what kind of LP you are more or less flexible in that subject. Yeah? So another comment that I would make here is, in particular, if you want to tap into public money, where I think the boundaries are even more narrow defined, one thing you need to do is you need to engage early on, and you need to understand what are the boundaries of your mandate that you would like to tap into. You need to check whether you're consistent or not with this mandate requirement. You need to see whether you can adapt if this is not entirely the case. And you need to, in a way, also accept a certain level of inflexibility if there is not full consistency. And I will stop here and then maybe play back the question of what would be your wishes towards investors that you're approaching?
Well, I think probably, thanks. I think probably we can split into maybe two types of investors: institutional investors or DFIs or governments that would need to provide us with kind of the first loss or the blended finance piece. And I think first of all, touching what you said about mandates, we feel that sometimes it's even ridiculous. I mean, let's talk about the simple thing of a mandate, and I was mentioning in a discussion I had with just earlier. We talk about, let's say, an example of the Norwegian oil fund, okay, and they manage a sum which is it's probably 1.8 trillion US dollars. And their mandate is to invest 2% of that into renewables, and none of that into emerging markets. So the 2% actually represent 36 billion, and from what I've heard is that they're actually underinvested. They invest only 30 billion. And now there are calls actually to expand the mandate and actually to include emerging markets, because this is where really the real growth is, and that's where the real money is required. So this is kind of maybe the most basic kind of example of mandates. But apart from that, when we approach a DFI, and then we come with our portfolio, which includes India and Bangladesh and Cambodia, and then one DFI would tell us, I'm sorry, but for us, yes, Bangladesh and Nepal is good, but Cambodia no, we don't deal with this part of Asia. Or let's say, yeah, it's good that you're doing that, but the islands, the Pacific Islands are, it's actually, for us, it's too much of a risk. So these mandates, on one extent, I mean, yes, we do need to adjust and find the right fit for us. On the other hand, those institutions need to lift those barriers, and if we need to bring those funds to those emerging markets, I mean, diversification of countries is key in reducing the risks for the investors. If we can do that for institutional investors, then the money can flow, I mean, with blended structures, with strengthening of credit, of the credit, providing an investment grade. But please, I mean, then don't strict with with political issues going into, okay, we're not going to invest here, we are not going to invest there. That brings a real constraint in who can we speak to, in fact. So I think that's one aspect of course, mandates. We feel in general that there is, I think, again, going back to DFIs, and we are coming with a solution, and we are mobilizing climate finance potentially in the hundreds of millions and maybe later billions. And the answer that we are getting is, but we don't see the added value because we are doing those investments ourselves in those let's say, financial institutions. Well, I will not go into that because there is a lot of added value in, for instance, in our strategy. But the key thing is, in fact, in the fact that we bring the capital, the private capital, which is so much required for climate finance. So maybe, Barbara, you have a take on that. I don't know.
Well, actually, my take on that is that private capital is the holy grail, And whatever mobilizes most private capital to be channeled into a targeted region should basically be the one that deserves the support. I do know, though, that of course, and I'm pretty sure that this is the view of DFIs as well, but I do know that of course sometimes reality is different, and we all know that business plans are being made up based on volumes, not necessarily always on capital mobilized. So I clearly do see your concern here.
Good point. Yeah, to be optimistic and positive, actually we did manage to convince, let's say, DFI that in fact, yes, I mean, this is the great added value, of course, is that we bring a lot of funds, and also, okay, there are many other added values, but we did manage to convince, but we see this as a first barrier somehow, that's we get.
Absolutely. Can I ask you one more question? How did you cope with your, say, impact requirement, reporting, KPIs, and so on with your investor constituency? Did you see very aligned requirements, or was it a lot of a stretch for you to respond to this?
Here we see relatively aligned requirements, and the feedback that we get from institutional investors or DFIs allowed us actually to build eventually our impact draft impact framework, in fact. And we see that this is kind of well accepted along the impact investors. But when it comes to institutional investors, I mean, they need to kind of get aligned and adjusted to the notion, in fact, of impact. If I make the distinction between the two investor types. Maybe I can ask how would you advise us to go forward, in fact, in approaching public funds and institutional, and whether you see, I mean, because you have experience, of course, investing in many of impact funds, I mean, what was the outcome actually? I mean, is it a successful investment, or is it actually not going well?
No, absolutely. I mean, I do believe that impact investments are a big success. And by the way, I also believe that perceived risks when making impact investments, in particular in emerging markets, are not necessarily aligned with actual risks. I mean, if you compare the GDP of African countries, for example, with European countries, the GDP growth and the potential is much, much bigger. I think in hindsight, what we can see is what was basically, if you want, high impact, but also innovative and something exotic 15 years ago, as if you, for example, compare it to renewable energy investment in developed countries, which 20 years ago was not so much of a market, has the potential to become mainstream, which is actually where we want to get to. So this is one key takeaway. The other takeaway is that sometimes, I mean, of course there are things that have not gone as planned because the plan hasn't worked out. Very often, though, it was not necessarily because it was the wrong investment approach or the wrong business strategy. In some cases, it was the right approach at the wrong point in time. If you think about voluntary carbon certificates some 12, 15 years ago, for example, we would have a completely different talk these days. But also coming back to my original point, I think the main reasons why I have seen impact funds investing in emerging markets not achieving what they wanted to achieve was not necessarily on the business strategy, but because there were basically flaws in governance, in structuring, and in the overall setup.
Yeah, I think that when reflecting kind of on what you say, I think that we make all efforts to kind of put in place the picture that investors want to see. I mean, we know investors don't like us being a new team, so we are taking an asset manager to man with credit basically track record, so that excuse goes away. We provide the right impact framework. We we really make all the efforts to kind of position ourselves to kind of be able to be accepted by those investors. I have to say that, I mean, in many cases, I mean, one thing that we don't appreciate is, and I'll be very frank here, I mean, we just like to get a no. I mean, if we are talking to a DFI or talking to an investor, and we are I mean, I just don't want to say names, but one who dragged us for 2 years, and there was simply, we didn't, I mean, now maybe in retrospect, and maybe we had this discussion before the talk, we say, okay, perhaps we need, I mean, there needs to be a sponsor within the organization that supports you. And nowadays, when I go to a discussion with the investor, and I just don't feel it, I mean, or maybe I kind of naturally I would just walk away, and I would not try to be, okay, why don't you send us this and send us that and send us this, and 6 months have passed, and eventually, okay, maybe you change your structure. We've heard that as well. You need to change your structure in order for you to be accepted by our committee. And then it goes to the committee, and we actually did it. We changed the structure. And they came back to us and said, well actually now we are looking at a different aspect of what you're doing, and at the moment we are full capacity and we cannot do it. So please, I mean, you could have done that a long time ago.